Good morning and welcome to another edition of the OFX Currency Corner. Despite a reasonably soft print in US non-farm payroll numbers at the end of last week, the Australian dollar failed to capitalise and make any extensive upward gains, but we have managed to regain that 75-cent handle and break above those year-to-date lows around the 74.50 mark. The long-term or the immediate and rapid sell-off that we saw since mid-April seems to have stabilised at the moment, and we're looking at fair value ranges now between that sort of 74.30 handle running up to 76.30, and we'll be looking at a few key indicators in governing direction within that range moving forward. Today's retail sales print, if it moves above that 0.5% level, could increase expectations for inflation moving into the end of the year and perhaps give us some short-term upside moving up towards that sort of 75.80 level. However, longer term we'll be looking at, of course, the US yield level and 10-year notes pushing through that 3% target and perhaps seeing us pushed back towards the lower end of those ranges towards 74. This week, of course, as well, political focus and geopolitical tensions will be governed by the impacts of the Iran oil deals at the moment, and if we do see an increase in those oil prices, that could lend itself to some short-term increases in value for the US dollar and continue to push this momentum that the world's base currency is enjoying, having touched year-to-date records on a G10 currency measure. Of course, we've seen significant sell-offs in the euro and the pound as well through this last week as well, so we'll be keenly watching Australian dollar's performance against those key counterparts as well. For further direction, you can reach out to any of our dealing teams and they'd be more than happy to help. Thank you.